Will Tesla stock double in 2020? Hedge funds say no, buyers say yes. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time on our channel, welcome. Repeat visitor, welcome back. Also want to thank our subscribers and Patreon supporters. Your support is greatly appreciated. If you enjoy the show, please take time to like and subscribe. So I had an encounter recently with someone who was headed to New York to have dinner with a gentleman named Jim Chanos. As you may know, Jim Chanos is the head of a hedge fund, and he's one of the biggest Tesla shorts in the world. And while he was making some money this year, things have turned around as Tesla's stock price has risen. Every $10 of increase in the value of the shares of Tesla is $1 billion in losses to the hedge funds. So nowadays, when I see a Tesla go by, I'm really fascinated to review the use cases for why it is that there are these hedge funds and others that feel that Tesla's nearing going out of business or going to do very poorly, etc. And I'm reminded of a lesson I got from a guy named Gene Siskel. Gene was a movie reviewer, and he said to us one day, you should be aware that anytime you buy a movie ticket, the fact that you purchased that ticket is a mandate for this same movie being made again. So be very careful which ticket you buy. So I thought this was interesting when it came to Tesla, because one of the biggest hedge funds managers, as I said, Jim Chanos, often talks about the fact that he identifies some issues that he may have with Tesla, and he tries to leverage those into reasons why he feels that the stock has a very sort of ugly future. And so first I wanted to address some of his comments and then address how buyers are reacting to electric cars that give a answer to that case. So the first thing that he talked about, and then I always end up looking at, is that he pointed out that Tesla has a lot of qualities similar to what happened with Enron. He made a great deal of money, Jim Chanos did, shorting the Enron stock as the company went under, and it, I believe, turned him into a billionaire. The thing we found interesting is that when we see consumers driving Model 3s, and happily so, and when we quiz them about their vehicles, we're getting 95% happiness with the vehicle, would likely buy again, and some minor repair issues might pop up as a dialogue, but in general, those consumers are very, very happy. So the question that pops up then is Jim's thesis. Number one is it has Enron proportions. And in the case of Enron, they had some off-balance sheet financing issues that pumped the stock up. And once they were revealed, they kind of destroyed the stock. And so in Tesla's case, we really don't see a similar fashion or similar going there. The second thing about Enron that we thought was really fascinating, that it's interesting to watch cars in the process, is the fact that every time I see a driver and that driver is happily driving their Model 3 XS, I keep thinking to myself, is this an Enron situation? And the reason I think that is that in the case of Enron, you didn't have a large number and growing number of buyers that were actually very happy with their solution. And the solution that they've purchased from the company allows them to be autonomous from the company, perhaps on a permanent basis. Yes, you have to pay, I think, $1,000 or something fee per year to manage software upgrades, but in general, the thesis of the sort of hedge fund destruction along the Enron lines seems to be sort of crushed. The other thesis that he sort of dove into is the fact that as Tesla has withdrawn from Mobileye, we now have the situation where there's the potential that Mobileye has all the invested dollars of 90% of the car companies. In the case of Mobileye, they have the benefit of the fact that if you have 90% of the company's using your autonomous technology, you have way more dollars to invest in the solution of mobile, and therefore Tesla's at a disadvantage because they can't afford to invest as much, and therefore might get behind on this. And even that thesis doesn't make sense because Elon is really pushing the envelope on this, building its own chips, etc. Yes, there's a disconnect in terms of Tesla moving along the lines of they're not moving on LiDAR as much as they are radar, sonar, etc. But one couldn't say that Tesla is very far behind. You'd have to say that it's perhaps a Mexican standoff in terms of where we are currently and what's viable given the road structures, etc. So, as you know, Jim Chanos didn't present any other arguments, but we wanted to look on the other side of this case. And we start with the CEO of Panasonic USA made the comment that Tesla has 80% market share. And so we were kind of intrigued because this is like, well, they've got 80% market share, but is it because they're lucky? Is it because, you could sort of try to find a negative layer there, but the reality is that your wealthiest consumer is the best informed, best researched. So basically what you could argue is that your best informed, best researched people are saying in 80% of cases that they actually want to buy a Tesla and not other brands that are available. And so this is why in our label we said hedge funds no, buyers yes. Now there's an interesting thing that's been going on. We often talk about Bob Lutz and his theory that the very large auto companies would enter the space in force and in numbers as we enter the 2020 and 2021 space and thoroughly devastate Tesla in the process is one of the theories that was presented by Bob Lutz. And we now have sort of the second wave of vehicles that are being delivered. And we actually thought it was going to come from Daimler-Benz, but it turns out it's coming from VW in the form of the Taycan. And we've sort of been debating on is this a separate show or not, but there's some interesting statistics. VW via the SUV at Audi, as well as the Taycan of Porsche, now has two vehicles that have hit the market and it's squarely focused on Tesla and its dominance. In the case of the latest version, which is the Taycan, there's some interesting statistics that came up. VW had suggested they were going to come in with about 300 miles of range or 289. The EPA from the US on their range is about 204 miles. And so when we add something in that's called the 80-20 rule, so if you want your batteries to last, you typically want to use up about 80% on the downside, so you have about 20% less. And on the upside, you want to fill it up to about 80% on a regular basis. What this does is it gives an alternating rest to a group of batteries all the time. And what it allows you to do is preserve your batteries over time. So if you choose to use up all the range to zero and then fill it back up to 100% again, that is extremely hard on a battery, Tesla's, or it doesn't matter whose it is. So in the case of VW, if you use the 80-20 rule on the battery, you now have an interesting situation where, let's say you lose 60 miles of that 200-mile range, so you're now down to 140 miles. Now the second thing that happens is in the United States right now, it's the winter months. So in theory, you lose somewhere between 30 and 50% of your battery life during the winter months. So now you have a 140 mile range vehicle that's down to about 70 miles of range. And you don't have a large supercharger networks to support when that range gets kind of tight. So let's add one other sort of what if into this, which is, let's say it's cold outside and you choose to use the heater in the car and or the radio and or the wipers. So now, to be safe, you have to kind of forecast in your mind that you have between 50 and 60 miles of range. So the remarkable or interesting question mark is, will wealthy and well-informed consumers choose to get effectively 50 or 55 miles during the winter months from either of the products now available from VW, or do they want 150 miles in the same sort of time frame, in the same situation? So we were fascinated by the fact that, you know, if you choose dumb consumers, you have no problem in selling a bunch of vehicles. But when consumers are paying $150,000 for a performance car like the Taycan, those folks are going to be well informed, and they're definitely going to read carefully and determine how and when they're going to purchase. So one could move on. The ID3 just came out under the VW brand, and they're suffering similar issues as Nissan is suffering with the Leaf. The problem still is that because they don't manufacture and because they don't have comparable battery to what Tesla's up to, you have the same situation on the bottom end. And that bottom end problem is, if you have a smaller battery pack, you already have short range, 100 mileage, call it 130, 140 miles. And then you bake in all the other issues I just described, and you end up with a vehicle that costs $30,000 to $45,000. And at the end of the day, that person has 40 or 50 miles of range on that vehicle. And it might work for folks who have very short commutes, or it doesn't get very cold, or there's a whole list. But in terms of maximum flexibility, those folks are in sort of bad shape, a la the other vehicles. So we've been really impressed by people we meet who don't own Teslas and the degree to which they're knowledgeable of sort of the pluses and minuses of both Tesla and competing vehicles. And so it is, so we think it's fascinating because, it's, we could go on with other statistics, but I think you get our drift. The bottom line is that you have a very intelligent consumer base, number one. Number two, Tesla has 80% market share for a reason, because the solution actually works and it delivers summer, winter, fall, etc. So we're in a very interesting situation because you have all these giant companies that are losing huge amounts of market share, and the normal process of, we have a lot of money, we're going to introduce a product, you go out of business, that is appropriate for other types of vehicles. It all doesn't add up. So what our argument is what if Tesla maintains its 80% market share and the market continues to grow and Tesla has enough batteries to put in semis and different types of vehicles and enter the marketplace with these solutions, and consumers are happy with them and are saying, we're not interested in offerings coming from others that don't include your own supercharger network, that don't include the type of range that Tesla offers, and frankly doesn't include the fact that you're entering the zone now where there are enough people that know at least one person that owns the vehicle, that might have given them a ride in it or other things. So you have a whole collection of reasons why it is that you now end up with buyers focused on one manufacturer primarily, and until competing manufacturers can deliver a solution that at least is comparable, that's when you have an argument to say this is not going to occur. So the question mark is, our thesis, and the reason why I posed the question, why is it that we're talking about Tesla stock price doubling in the next year? Well, there are several sort of elements to it. One of them is what I call the Elon discount. So if Elon had chosen to, on a stair-step basis, do normal CEO stuff, the stock price would be above $400, maybe even $450 by now. But there's a discount, and what the discount is about is, are you guys going to do something crazy that we don't understand? And therefore, we have to jump out of here and protect ourselves. So that amount is definitely $30, but it might be $40 or $50 on the stock price. The second thing that's going on is, um, as you have the Taycan and other products being introduced, this weighs on the stock price by 20, 30, 40 points. So, for example, when the SUV from Audi came out, there was like, oh, this product is coming out, here comes the competition. Then it was announced it's 204 miles in range. Then it was announced that when everything is done, people in operating climates at or below zero or freezing, 30 or below, in the northern half of the globe, are experiencing 60 to 80 miles of range on that vehicle. And so then you saw the sales numbers start to decline after our initial burst. So the competitive threat, in essence, disappeared, and that's also a hit to the stock on the plus side. Another thing that's coming for Tesla is something called 4 quarters of profitability hit. So basically, if Tesla has 3 more quarters of positive earnings, it will be added to something called the S&P. So there are a large number of institutional entities that are required to buy all the stock in a proportional basis that are on the S&P. So we're kind of intrigued because there are these, as you can hear it, we haven't even talked about the fact that Tesla's going to have enough batteries to deliver the Model Y as well as the Semi and the Roadster. So you have all these new products that represent growing sales in addition to these other variables. So it may not double in the coming year, but with the intensity of growth of revenue and sales for Tesla and maintaining its 80% market share across a number of markets because the quality of response from competitors is so low. Once we get into this and it's very clear what I just described as happening with the competitive threat that's being offered by others, both investors and consumers are going to have to take a breath and say, okay, I think we know where we want to put our money, and clearly it's behind Tesla and its ability to keep doing its thing. This is maybe a sidebar note, but prior to the last month of when the Cybertruck was out, prior to that, you noticed that there were a number of people, they were mostly truck buyers, who were sabotaging Tesla cars primarily because they weren't able to get into the space potentially in the form of some kind of electric truck. So you'll notice that there's fewer incidents of sabotaging Tesla vehicles or blocking superchargers because even the truck buyers now are going to have an alternative that's electric, that's high quality. So they can order their truck and not, damage Model 3s or other vehicles because they can't afford them, because there's a nice range that includes pricing of range that's affordable for people that might be a F-150 buyer. So it shouldn't be happening because this is a very old business that's been around a long time. But in essence, Tesla is meeting all the questions that might be posed. The only question that has not been answered, and that represents a competitive threat once competitors do have a valid answer to Tesla, is the fact that the dealer network / auto parts facilities, aren't meeting the numbers that they should. And even that, I think, will improve because a lot of the parts from the United States are being shipped from Europe. I believe it's possible China may be able to start producing extra doors and hoods and all those things that they're producing for the Model 3 in China and just ship parts to Europe, reducing, the squeeze on parts, et cetera, that are needed from the United States. So the question then we get back to is our original thesis of, will Tesla's stock price double in 2020? And the one last thing that we think is lurking off the back end here is that the short interest, or people betting against the stock, has declined from about 25% of the shares available down to about 20 or 21%. And so where we see this stock price pushing very hard is at capitulation. So if Tesla, I think by the time Tesla reaches another 3/4 of profitability, the number of short folks is going to decline down below 10%, possibly lower than that, because we'll be at the point now where you can battle with some institutions, but when it comes to a company entering the S&P, it's very hard to argue against, in essence, the entire stock market with your thesis. So, with these themes in mind, short interest has to cover. Tesla maintaining an 80% market share with folks introducing nice products like the Taycan, but they're not really meeting the consumers on most of the globe's needs. There's a situation where you have a growing market for products and you have a best of breed solution with little to no competition. And this is kind of a recipe for a company that's doing well short term and that we think is going to continue to do extremely well. And there are a number of folks like Art Capital, they were talking about a $4,000 stock price for Tesla within the next 3 or 4 years. And we would say that that's entirely possible. And I think a doubling in 2020 up to these higher numbers will be very interesting. There's one other thing, you may not be an owner currently. There's one other thing that I find fascinating as I'm watching Model 3s drive by, and not so much with the Model X, which is in America, we've gotten used to a process where there's a stair step that occurs, which is you first get your car out of college, it may be a used vehicle, it's very small, good on gas, and then you finally get your job, you buy your first car, maybe it's a Honda, and then you push maybe to a Lexus, by the time you're in your 30s, and now you're in your 40s and 50s and you have disposable income and you're thinking, oh, now I can get a luxury car commensurate with the work I've done to get to this position. And so I continue to be amazed because the definition the auto industry has given is that you're now in the Mercedes, Audi, BMW, Cadillac sort of frame of cars. And what can you get as part of that? And that includes heated seats, there are all these things that you're accustomed to getting. And one of the things I'm totally amazed by is whenever I watch, I want to call it upgrade buyers in their 40s and 50s driving the Model 3 in particular, I keep thinking to myself, that's amazing because they're paying $50,000 to $60,000 for a vehicle in the electric space where they could bounce over and drive an Audi or some of the other makes, and the performance won't be there. It won't be an electric car in performance, but there are a lot of consumers that are supposed to be driving some of the other big names that have elected to jump out of that stream of car process and embrace what Tesla has to offer. And this despite the fact that they can't call their neighbor up and say, my vehicle has 500 horsepower, or my vehicle has X number of screens. For example, the Model 3 has one. There are a lot of competitors, even the Model S and X, that have multi-screen situations. So it's fascinating to watch consumers move into a zone where it's kind of like less is more, and they're willing to make that sacrifice, which is fascinating to us. So the argument you make from an economic standpoint is the whole idea that there's a marginal utility conversation. And the argument that they're making is, yes, we're giving up a collection of things we could get at this price point with other vehicles, but given the other things we gain in the process, we're easily willing to make that change. And as you talk with those consumers, they have no plans to head back. So the final component of what's going to happen with Tesla is that once people do make the switch to electric, there's a sensation of the fact that they're not really interested in 3 years planning to switch back to ICE engines again. And so this is the sort of all the recipe elements, or a bunch of them, that we think that suggests that it's amazing to watch the hedge fund type folks sitting on the side of Tesla's about to go out of business because of sort of all the variables that I just described. So we actually we're at the point in the show we typically take questions, look forward to any of them that you might have. we actually think the stock's going to double, in the next year for all the reasons we just described. And as you expand into China, you now have new facilities and the battery amounts are increasing from the Panasonic plant. So we see a recipe for a very, very fast moving stock. And you almost have to prepare early for Tesla because as people see the numbers and what's really happening, as you saw in the last earnings announcement, you basically had a 100-point move, 125-point move, in a week or two. So when this happens for certain stock, it moves slowly to those new realities. In the case of Tesla, it tends to be a sudden lurch forward. So this is kind of perhaps a preview of earnings that we're expecting to see, but we look forward to your questions and comments post. At any rate, first I wanted to say thank you to Donovan, Gareth. I saw a number of you say hello. We obviously don't say hello anymore at the beginning of the show, or et cetera, but we can see all of you from around the world that have taken time. I saw UAE, hello on there, which I have to admit I was a little surprised by because Tesla doesn't have much of a presence in that part of the world right now, but that'll change pretty soon. Any rate, just a reminder on our health tips, don't forget fried foods no more than once a week, 25 leg lifts per leg. Make sure you strengthen the quad muscles and the knee is sort of locked in. Also, don't go to bed within 4 hours of eating, ideally 2 hours minimum to let the food digest so you don't have acid issues. Any rate, this is Greg for Teslafaninsight. Thanks once again for joining us. Tschüss in German, au revoir French, Lihitrot, Hebrew, Choda Hafez Farsi, Hedge do Swedish, thanks to Brother Donovan, Zdravstvuyte Russian, Ni hao ma Chinese. We very much look forward to even arguments against what we're saying. We're open to because I think it's pretty clear where things are going on this, and it shouldn't be occurring because you have so many big competitors with a lot of dollars that are unable to come up with a response that consumers are happy with. So, I think that big companies can try to dictate what consumers are supposed to be doing, but those consumers have the power to sort of influence things with their buying decisions. And I think that 80% market share that Tesla has currently is a reflection of what consumers think of competing products. Once again, thanks for joining us. Have a great day and bye for now.